Bitcoin just slammed through levels that made grown traders cry. The market has been drowning in fear for an entire month. Headlines screaming war, recession, collapse. Yet something feels different this time. Is the bottom already in? Or are we staring at even more pain ahead? Today on Schooled by Market, we're going full forensic on Bitcoin's multi-timeframe analysis. Daily, 2-day, 3-day, weekly, bi-weekly, and monthly charts all just closed. We're ripping open every indicator, every moving average, every historical parallel so you know exactly what's coming next. This is the analysis that could save your portfolio or warn you before the next leg down. Stay until the end. I'm revealing my personal short-term bias and the exact levels that will decide this cycle. Let's dive in. First up, the daily chart. Look at this. We just printed the highest candle close since February 17, and price has crossed above the 20-day simple moving average. That's the first short-term bullish signal we've seen in weeks. Now check the RSI. It's building a beautiful higher high, higher low structure. Momentum is quietly shifting in favor of the bulls. The stochastic RSI is also marching back into the bullish zone. These are textbook bullish developments. But here's where it gets real and a little dramatic. The MACD has already crossed bullish, green histogram, bullish crossover. Yet price is lagging behind like it hasn't gotten the memo. That divergence is a warning sign. And look higher, we have a wall of notable moving averages still sloping downward, acting like a ceiling ready to crush any rally. These are not friendly levels. They are potential resistance if Bitcoin tries to run. So daily chart, short-term positive, but still fragile. Stepping up to the 2-day time frame, the picture is almost identical. RSI and stochastic RSI both look healthy. The MACD has just flipped green. Everything on the momentum side is smiling. But again, price has not broken any meaningful resistance yet. And just like the daily, we have a graveyard of downward-sloping moving averages waiting to act as resistance. This time frame is telling us the same story. Momentum is turning, but the real breakout still needs to happen. Now the 3-day chart. This one gets exciting. Higher high and higher low on the RSI, and it just broke above its own simple moving average. Stochastic RSI is neutral, MACD is improving. But here's the cherry on top. If Bitcoin can hold above $67,600 by March 5th, the upcoming 3-day candle close could form a massive bullish engulfing pattern. That would be one of the strongest reversal signals we've seen on this time frame in months. So far, the 3-day is the most bullish of the short-term frames. Alright, now we zoom way out to the weekly chart. This is where the drama really begins. The weekly RSI is sitting at the second lowest reading in Bitcoin's entire price history. Let that sink in. Historically, when the weekly RSI has been this deeply oversold, below 30, it has marked the cycle bottom on 2 out of 3 occasions. January 2015 and December 2018. Absolute generational lows. There was one exception, June 2022, when the RSI looked exactly like this. But Bitcoin still had several months of pain left. So which era are we in right now? That's the million-dollar question the entire market is asking. Zooming back into the recent few weeks on the same weekly chart. Look at these long lower wicks with solid volume. That screams buyers stepping in aggressively and absorbing every bit of selling pressure. The February 2nd candle came within a whisker of the 200-week SMA. The legendary cycle bottom line that everyone worships, but never actually touched it. Buyers were front-running that level. However, we did break the 150-week SMA. It has now flipped from support to resistance. And above us, a nasty confluence of moving averages stacked between $85,000 and $90,000. That zone is going to be a war if we rally. The 2-week chart looks almost identical to the weekly, and the RSI plus stochastic RSI patterns line up perfectly with January 2015, December 2018, and June 2022. 2015 and 2018 were cycle bottoms. 2022 was not. Yet if you scroll through trending posts on X right now, the bears are obsessed with only showing the 2022 example. Is that recency bias? Or are they conveniently forgetting the 2 times this exact setup marked the absolute low? Food for thought. Finally, the monthly chart. March has just begun and we now know exactly how February closed. Unfortunately, the 34-month EMA failed as support, exactly what I warned about in my previous analysis. So I am still watching for a test of the 48-month simple moving average currently sitting at $58,000. But here's the bullish twist nobody wants to admit. So far, Bitcoin has held the 48-month EMA and the 60-month EMA as support. These are 4-year and 5-year moving averages that literally saved the cycle in January 2015 and January 2019. There is a very decent probability that the wick down to the 60-month EMA around $60,000 was the actual bottom. If the next few months prove those 2 EMAs cannot hold, then we must prepare for the 2022 style scenario where price tested the 96-month or the 8-year EMA, currently $47,600 and still rising. Also note, $62,000 lines up exactly with the 2021 all-time high on a monthly closing basis. That reinforces $60,000 as an extremely strong support zone and possible cycle low. Stepping away from the charts for a moment, the sentiment has been apocalyptic. The crypto fear and greed index has been flashing extreme fear for 1 full month straight. Negative headlines, including war, hit the market hard, and yet price refused to break lower. That, ladies and gentlemen, is classic seller exhaustion. When the worst news can't push price down, the sellers are running on fumes. We usually need price to go higher before the remaining weak hands are willing to sell again. To summarize everything we just covered, decent volume over the past month while price holds above the February 5th capitulation low. This is accumulation, not distribution. A short-term momentum is clearly positive while long-term momentum is turning around. Price respected the 48-month and 60-month EMAs as support, powerful historical levels. Extremely bad sentiment and negative news are no longer pushing price lower. Seller exhaustion confirmed. If we rally, $85,000 to $90,000 is going to be a brick wall of resistance. Worst case further downside? $47,000 if the 2022 playbook repeats. Personally, I am holding a short-term bullish bias. My base case is a relief rally in the coming weeks and months. Then we'll reassess whether it's just a bounce or the start of something much bigger. So there you have it, the complete multi-time-frame breakdown of Bitcoin right now. The charts are whispering that the worst might be behind us, but the battle is far from over. Drop your thoughts in the comments right now. Do you think the bottom is in? Are you buying this dip or waiting for $58,000? I read every single comment. If you found this breakdown valuable, smash that like button. It helps the algorithm show this to more traders who need it. Subscribe and turn on notifications so you never miss the next deep dive analysis. Thank you for watching Schooled by Market. Stay disciplined, stay patient, and I'll see you in the next video. Until then, the market is always teaching. Are you paying attention?